All right, ladies and gentlemen, it's your host, Aaron Fragnito, with the weekly real estate news briefing hosted by People's Capital Group. I'm co-founder of People's Capital Group. Here we focus on buying apartment buildings in New Jersey, but this is a show for real estate owners, by real estate owners, and we're going to talk about some of the top real news stories in real estate today that are affecting us as property owners. So we're going to break right into it here. Our first article is by CNBC. Pending home sales surge for the second consecutive month as the realtors raise their forecast for 2020. All right, let's break into this article. So the key points: pending home sales continue to climb in June, rising 16.6% monthly since May and rising 6.3% since June 2019, according to the National Association of Realtors. That's very good news for us property owners and people looking to sell real estate or flip houses as well. The realtors have also raised their forecast for the housing market because of what they say is an apparent market turnaround. It goes on to say for 2020, existing home sales are expected to decline by only 3%. New home sales are projected to rise by 3%. And so let's get into this article here. Pending home sales continue to climb in June, rising 16.6% monthly since May and rising 6.3% since June 2019. Very good news in the middle of this pandemic. According to the National Association of Realtors, okay, so this beats expectations for the monthly gain, which was a rise of 12.5%. It is the second straight month of gains in contract activity. The realtors have also raised their forecast for the housing market because of what they say is an apparent market turnaround. For 2020, existing home sales are expected to decline by only 3%. New home sales are projected to rise by 3%. So look at that. People want new homes. I don't blame them. Buying new construction is nice. Less things to fix. We're going on here. The previous forecast for existing home sales in 2020 was down 7.7%, with new home sales up 1%. It's quite surprising and remarkable that in the midst of a global pandemic, contract activity for home purchases is higher compared to 1 year ago, said Lawrence Yun, NAR's chief economist. Consumers are taking advantage of record low mortgage rates resulting from the Federal Reserve's maximum liquidity monetary policy. Pending sales measures signed contracts on existing home sales, so it shows that buyers were out shopping during the month of June, just before the most recent surge in corona cases. Sales had spiked in May, a stunning 44% compared with April. Talk about pent-up demand. The average rate on a 30-year fixed mortgage at the beginning of June was about 3.24%, incredibly low. And by the end of the month, it dipped to around 2.95. Oh my gosh, even better. According to Mortgage News Daily, rates have been hovering near record lows, around 2.9% since then. National Association of Realtors anticipates rates to stay at or near 3% over the next 18 months. So we'll stop there for a sec. That's great news for homeowners, owner-occupants, people that are buying homes in their name. They're going to get that rate. Now, for real estate investors, we buy properties in LLCs, so we pay more of a commercial rate, but still, it's very helpful to have interest rates low like that. That does allow us to get lower interest rates on the apartment buildings we buy. But this is great for new home buyers and great for house flippers, because if it's easier for buyers to get low interest mortgages, that means they can qualify for larger loan amounts and more buyers can qualify to enter the market. More buyers means more sales, means values of real estate go up, or at least hold strong. So we'll continue here. This follows last week's NAR report showing the sale of existing home sales in June rose a stunning 20.7% monthly. That's huge. I think that's all that pent-up demand. That's the largest monthly gain since the realtors have been tracking the data in 1968. This count is based on closings and sales, where still lower annually by 11.3%. Okay, so one of the biggest issues remains the supply of existing homes for sale, which fell 18% annually in June and to just 1.57 million homes, according to NAR, based on the current home sales pace. That represents a 4-month supply. Okay, we'll stop there for a sec. So a 4-month supply, very low. You really want at least a 6 to 8 month supply in a healthy market. Last June, 350,000 more homes were on the market. The supply was up just 1% monthly from May to June. Yun says the price of lumber is hurting the builders. While the outlook is promising, sharply rising lumber prices are concerning. Reduction in tariffs, even if temporary, would help increase home building and thereby spur faster economic growth. Regionally, pending home sales rose in all 4 regions of the United States. In the Northeast, sales increased 54.4% monthly and were down only 0.9% from a year ago. In the Midwest, pending sales rose 12.2% monthly and 5.1% annually. In the South, monthly increase was 11.9% up to 10.3% annually. In the West, pending sales jumped 11.7% monthly and were up 4.7% annually. Finally, the Northeast strong bounce back comes after a lengthier lockdown, while the South has consistently outperformed the rest of the country. Yun said these remarkable rebounds speak to exceptionally high buyer demand. Okay, so this article explains that, there is a lot of pent-up demand, rates are low, and people are buying. People are buying houses. That is good news for everyone. We want people to be buying houses. That allows the economy to move. It's one of the biggest movers of the market, of the economy. When people buy homes, they create jobs. All right, here's our second article. We go over 3 articles every week at the weekly real estate news briefing here, hosted by People's Capital Group. Now, we focus on buying apartment buildings in New Jersey. We're also actually opening up an Airbnb branch right now as well, so we'll learn more about that if you're in our network. If you're not in our network, if you don't get our emails, you don't know much about us, go to peoplescapitalgroup.com. That's our website where you can learn more about how we help people passively invest in professionally managed, high-demand real estate here in North Jersey, and how we educate people for free on how they can become passive investors in real estate to reap the benefits without taking all the risk. Okay, let's break into the second article. Mortgage interest rates start to see increases here from Forbes. So here we go. The story of the month was last week when mortgage interest rates dipped below 3% for the first time on record. Just historically extremely low. The threshold many in the industry doubted would ever happen. The trend has reversed its course slightly in the past week, with the 30-year fixed rate loans landing at 3.01%, so just basically 3%. In a weekly report from Freddie Mac, the 15-year fixed rate loans are still comfortably below 3%, with an average rate of 2.54% for the past week. This is an increase from last week when they had dropped to 2.48%. For both the 15 and 30-year loans, this is the first time in several weeks they have increased. All the increases that have taken place to early July since the outbreak of COVID were also slight fluctuations for what has been consistently downward trend ever since March. Data released today from the U.S. Census Bureau showed the number of home sales that closed in June increased by 14% compared to May, with 776,000 total closed transaction. It was also the highest number of home sales since June 2007. So record low mortgage rates and pent-up demand for the spring continue to be the main drivers for the housing market this summer, commented Mortgage Banker Association's Joel Cans, Associate Vice President of Economic and Industry Forecasting, in a statement. Sales were up 7% year over year, and all regions except the South were back to sale pace higher than a year ago. Weekly data on how many mortgage applications have been recorded show demand has remained strong. It's very good news. With a 19% increase compared to the week before. Holy mackerel, 19% increase from the week before. Talk about a boom. While all the numbers point to a robust recovery from the dearth of sales a few months ago, there are still reasons to be cautious over the coming months, Sam Cater, Freddie Mac's chief economist, said in the release. The most recent consumer spending data has been pointing to slow growth since mid-June. The concern is that the pause in economic activity will cause unemployment to remain elevated, which will lead to longer-term labor market distress. Okay, so of course, no one has a crystal ball, but it does look like there may be some headwinds in the economy overall. Here's our third article. Coronavirus pandemic helps real estate market soar. Interesting stuff here. Duluth, Minnesota. According to the National Association of Realtors, home sales were up 21% in June compared to May. That statistic might seem odd given the ongoing pandemic, but it's playing a role in the increase. Alyssa Denham has lived in her home in Superior for 5 years. We just outgrew it, she said. Denham said her children getting older, she felt her family needed bigger space, so she put her home up for sale after hearing the market was in a stable place. Kind of hearsay around town. We heard it was just a good market to sell, Denham said. Denham's house has been on the market a week and gained traction quicker than expected. It's actually pending, and we had an offer within 24 hours of listing. Wow, good broker, Denham said. The offer, more than asking price of the home. There you go. Doug Kaman, or Can, I'm not sure how you pronounce that last name. I guess the M might be silent, or the K is silent. Tough call. So President of Lake Superior's realtor said this comes as no surprise. In Minnesota, home sales are up to 8.7% right now, and in Wisconsin, they're up to 3%, Kamen said. The pandemic playing a role in the surge of buyers, the Federal Reserve has cut interest rates to 0%. That has helped interest rates in the real estate industry to be low, creating a competitive real estate market in a seemingly rough time, according to Kamen. With low inventory, buyers are struggling to find homes that they are really looking for and fighting over the ones that are out there. So that's good news for sellers. Hey, the low interest rates are good for buyers, Kamen said, which is great news for people like Denham who are excited to move into something bigger. We just need more space, more yard, and more bathrooms, Denham said. Kamen also said the market has been trending this way for years, and he expects it to continue to be favorable for sellers. A seller's market, imagine that, a continued seller's market. So, obviously, friends, a lot of talking heads out there about what the real estate market is doing. Interest rates are extremely low, historically very, very low right now. Extremely interesting. And also, we see that home sales are surging. There's a pent-up demand to own real estate. People want more space. They want a little land. They're moving into the suburbs, or if they live in a city like Manhattan, they're moving out into Jersey, we find. A lot of people are moving into our units in New Jersey because there is a demand to get out of the city. And even if you're moving into a suburban or a city town in New Jersey, it's a way to kind of get out of the tightness of the new city there, where there's a lot of challenges, get some more space, and of course, save money because it's more affordable to live in New Jersey than it is Manhattan. So those are three articles that really underlined, that the market overall, is at least residential home sales, is quite strong. There's a lot of pent-up demand. People need a place to live. And with interest rates being historically lower than they've ever been, people are buying houses. It's very understandable. And it looks like that trend's going to continue. So a lot of people saying, oh, the market's going to drop out. We're headed for the worst recession ever. But a lot of indications in the real estate market as shown here. And sure, maybe it's propped up by low interest rates, but at this point, the demand is strong. We have bidding wars on a number of our properties. We have huge demand for many of our rental units, and rent has actually gone up over time in the last few months here with this pandemic going on. Rent collections are strong. So we're doing quite well with our flips. We're doing quite well with our collections on our apartment buildings. And, we hope to see that trend continue as this pandemic continues. But my name is Aaron Fragnito. This is People's Capital Group. This is our weekly real estate news briefing hosted by People's Capital Group. If you want to learn more about what we do and how we help people passively invest in New Jersey apartment buildings, then you go to peoplescapitalgroup.com, where we have all our information. We have podcasts and videos and webinars about how to self-direct your IRA into real estate, how to diversify out of the stock market into real estate, or even how to become a passive investor if you're actively running around managing your real estate portfolio. So take a look. We work with all types of investors, accredited, sophisticated, big investors, small investors. And today, I think the message was from our three articles that we do see a lot of life, a lot of positive news in the residential home market. We love where the interest rates are right now. That's great for home buyers. That's great for commercial investors as well. And that allows people to go out and qualify for larger loans. And also with home prices being firm, the main challenge it looks like right now for buyers is finding a home that works for them. So right now there's low inventory. We have a lot of trouble finding a good opportunity. In fact, the hardest part of our job is finding a discounted property for sale, whether it's a fix and flip single family home or an apartment building. It's very hard to find a good deal right now. So inventory is low. I feel that pain. We see that here at People's Capital Group, and these articles reiterate that as well. But buyers are strong. It looks like the demand is out there. So let's hope the buyers keep buying properties. Sellers keep putting their hot properties on the market so the inventory does grow a little bit. We actually want to see about a 6 to 8 month inventory amount of inventory on the market. Now, what that means is that there's enough homes that if people stop listing their homes for sale today, there's enough homes on the market at the rate buyers are buying homes right now to have real estate on the market for another 6 to 8 months. So you want 6 to 8 months of inventory for a healthy market. Right now we're at 4. That's very low. So the main challenge in the residential real estate market is to get more inventory on the market. That'll relieve pressure on home prices. That'll help buyers qualify for, that if prices go down, buyers can qualify for more homes, and that will allow the market to even out a little bit. So that's something that we hope to see. But with interest rates low, if you're not a homeowner, hey, get out there and buy a home. It's a great time to take advantage of historically low interest rates. And if you can find the right deal, maybe something you can put a little elbow grease into and get it at a great price, that's the right way to buy real estate. Make your money when you buy. It's going to be hard to find a deal, but work with a good broker and do some research. And it's a great time to become a homeowner if you're not. And it's a great time to invest in real estate as well. With interest rates being low, rents being high, we have a very good scenario for buying apartment buildings because the cost of money is low and the rent collections are high, and rent continues to grow through this time because, quite frankly, it's hard to find a good home for sale with a low inventory. So a lot of people are renting, and rent growth remains strong in our North Jersey market here. So that's it for today, guys. I'm Aaron Fregnito of People's Capital Group. You can go to our website, People's Capital Group, to learn more. And hopefully you enjoy this little weekly update here on Real Estate News Briefing for property owners, by property owners. If you're not yet a property owner, you can go to peoplescapitalgroup.com and learn more about how we help people become real estate investors passively in high demand North Jersey markets by buying apartment buildings here in New Jersey. Thanks a lot, everybody. Enjoy your day.